Hello, everybody. Welcome. Let's get started right away. Tesla stock is up 8%. Overall markets, Dow Jones flat, S&P 500 flat, Dow Jones down 0.5%, Nasdaq up 0.3%. Gold is down 2%. VIX is lower. Russell 2000 down about 1%. So this is a very concentrated move today. I think there's some macro headwinds building into the weekend. But today, Tesla, Nvidia, and Google are up. Nvidia and Google are up about a couple percent. Tesla's up 8-9%. And they're pulling Nasdaq up and S&P 500 up a little bit. But Dow Jones, most of the market is down today, which is kind of interesting setup. Declining issues are 60%. Advancing issues are about 37% right now. And yeah, I think the technicals of the market is pretty bad. 5-year Treasury yield is down 3 basis points. 10-year is down 4 basis points. 30-year is down 4 basis points. 10-year is at 4.27. Crude oil is at $63 per barrel, up from $62 yesterday. Today, we got University of Michigan Consumer Sentiment final reading for April. Came in a bit more than expected at 52 versus expected 48.5. And the prior 51. We're going to dig into that a little bit. Let's read our article of the day. Wall Street subdued. This is again by Lisa Pauline Matakal, as yesterday. We'll see how this one is. Wall Street subdued as China trade uncertainty lingers, Alphabet gains. Wall Street's main indices were muted in choppy trading. Actually, you know what? I'm going to take these off. Okay, give me 1 second. Give me 1 second. Wall Street's main indices were muted in choppy trading on Friday as investors struggled with little clarity on the US-China trade front, despite signs of a possible softening in Beijing's stance. On a brighter note, Alphabet leaped 4% after the Google parent reported upbeat first quarter results, easing investor worries about returns on hefty AI-focused investment. The overall mood, however, became jittery when US President Trump said in an interview he would consider a total victory if the country had tariffs as high as 50% on foreign imports a year from now. Trump also said his administration is talking with China to strike a tariff deal and that Chinese President Xi Jinping has called him. Beijing, however, continues to dispute that negotiations are taking place, which is incredible. The conflicting headlines offset some optimism after China granted some U.S. imports exemptions from its hefty 125% tariffs, according to businesses notified. It's more of the market just kind of waiting and seeing how things actually progress, said Clayton Allison, portfolio manager at Prime Capital Financial. Everybody's trying to kind of figure out what's true, what's kind of political theater, and it really just feels more and more like headline volatility more than anything. Most mega cap and growth stocks are also gained, buoying the tech-heavy Nasdaq. Alphabet was shaking off the whole narrative that they're getting impacted by the ongoing trade war, Allison said. Intel dropped 7% following the chipmaker's dour forecast, while T-Mobile fell 8% after adding fewer wireless subscribers than expected in the first quarter, both among the biggest drags on the S&P 500. Interesting. Let's look into T-Mobile as well. I'm going to double click into that. We can read that next. Indices rose for the third quarter consecutive session on Thursday, the best winning streak for the S&P 500 since Trump's April 2 Liberation Day tariff announcement, and were set for strong weekly gains. The S&P 500 is so far up 4% for the week, while Nasdaq Composite and Dow have risen 6% and 2% respectively, mainly driven by hopes of de-escalating US-China trade tensions, Trump's backtracking on threats to fire the head of Fed, and some upbeat corporate results. However, sentiment remains highly cautious amid indications of a souring economic outlook and hits to company earnings from tariffs. The benchmark index remains below levels prior to April 2 announcement and is over 10% off its February record close. AbbVie rose 2% after the drug maker raised its annual profit forecast on strong sales of its newer immunology drugs. Declining issues outnumbered advances on all indices. Okay, let's look into T-Mobile real quick. T-Mobile wireless subscriber growth misses estimates as competition heats up. T-Mobile added fewer wireless subscribers than Wall Street expected in the first quarter as rivals dialed up promotions in a saturating U.S. telecom market, leading to a more than 5% drop in the telecom company's shares after hours. The report, the last among major U.S. telecom carriers this earnings season, underscored growing competition in a market where operators are leaning on price locks and bundled offers to woo customers as U.S. tariffs cloud the economic outlook. Bellevue, Washington-based T-Mobile added 495,000 monthly bill-paying customers in the first 3 months of 2025, more than AT&T additions, while Verizon lost subscribers in the period after warning of a hit from off-season promotions. Still, the figure fell short of FactSet estimates of 506,000 additions. That's interesting because T-Mobile just took a dive. That doesn't make much sense. Yeah, it's down 11% today. That's really wild. I mean, I guess this is one of the more high-flying stocks of the industry. T-Mobile stock is up in the last decade by about 10x, 15x. So that's interesting reaction by T-Mobile. There's more to the story here. Let's read. To shield its market share, T-Mobile's prepaid unit earlier this week unveiled 4 new plans that provide a 5-year price guarantee and monthly charges as low as $25 per line. The company also has plans to launch its satellite-to-cell service powered by SpaceX's Starlink in July. The final pricing for the satellite service would be $10 a month, and T-Mobile will maintain that price for at least a year, CEO said on a call with analysts. On the tariffs front, Sievert said T-Mobile is currently not seeing any material impact on its business. If the tariffs lead to price increases for the mobile handsets, customers would have to bear it, which could lead to a slowdown in upgrade rates, he added. I see. The company increased its 2025 adjusted EBITDA forecast to range between 33.2 to 33.7 billion from its prior projection of 33.1 to 33.6. So they beat the increased guidance, and the stock is down 11%. T-Mobile set very conservative EBITDA guidance for the year because they were preparing to spend more on acquisition and retention to get the ads they want in a shrinking pool. The first quarter, T-Mobile's revenue rose 7%, coming above expectations, according to data compiled by LCG. Let's look at the China tariff news. Trump tariffs. China eases some U.S. tariffs as Trump sows confusion on state of talks. U.S. and China tariff tensions continue to dominate the focus, with signs of de-escalation mounting, even as the broader state of relations between the countries remain unclear. On Friday, reports emerged that China quietly rolled back tariffs on some U.S. semiconductors, easing pressure on its tech sector, along with certain U.S. pharmaceuticals. Bloomberg reported that Beijing is also weighing tariff relief on medical gear and chemicals. The developments come as China has struck a publicly defiant tone, and President Trump sowed confusion by claiming that he had spoken with Chinese President Xi Jinping, which Beijing denied. China and the US are not having any consultation or negotiation on tariffs. The US should stop creating confusion, the Chinese embassy in Washington wrote on social media. Trump claimed that his administration was talking with Beijing, even as he declined to specify who took part in negotiations. It doesn't matter who they is, he said on Thursday. Oh my God, this is crazy. This is fucking wild. This is wild. Even as the bluster continued, the signs of a walk back boosted Wall Street hopes for broader tariff de escalation after an intense back and forth between the world's two largest economies. China raised its duties on imports of US goods to 125% from 84%, while US tariffs on Chinese imports have ballooned to 125% reciprocal tariff, a 20% tariff to address the fentanyl crisis, and Section 301 tariffs on specific goods between 7.5% and 100%. Meanwhile, Treasury Secretary Scott Bessent suggested a US South Korea trade deal could happen next week, praising South Korea's approach. In an interview with Time magazine that was published on Friday, Trump said he expects many trade deals to fall in place over the next 3 to 4 weeks. Investors are also focused on other key tariffs as well as delays and exemptions. Trump is reportedly planning an exemption on some auto parts levies after suspending duties on some consumer tech, even as he insists these tariffs will eventually come to fruition. The White House also ordered a probe into truck imports, paving the way for tariffs on the sector. The baseline 10% tariff that went into effect on April 5 remains in place for all affected imports into the US. Okay. I mean, it is really wild that Trump is saying they're talking, China is saying they're not talking, and Trump can answer the specific who is talking. So that's not a good sign. Um, we're gonna next move on to some macro stuff. Okay. Inflation expectations remain at highest levels since 1981, even after Trump's 90-day tariff pause. Americans remain concerned about rising inflation as President Trump's tariff policies take hold. The final reading of the University of Michigan Consumer Sentiment Survey showed pessimism over the inflation outlook soared in April, as one-year inflation expectations jumped to 6.5%, the highest since 1981, from 5% the month prior. Just 3 months ago, consumers had expected inflation of 3.3% over the next year. The updated survey came after Trump's 90-day tariff pause on April 9. Prior to the announcement, consumers had expected inflation to hit 6.7% in the next 12 months. Inflation expectations evolved with major trade policy announcements this month, a survey of Consumer Director Joanne Shu wrote in the release. After the April 9 partial pause, inflation ebbed but remained substantially elevated relative to March. Trump says, I own the store, I set the prices. Time magazine has an interview with Trump this morning that includes some new insight into the trade war. We're going to skip all that. We talked about T-Mobile. Tariffs on phones will have to be eaten by consumers, T-Mobile says. Swiss agreed to tariff negotiations with Trump administration. US seeks India trade deal on e-commerce, crops, and data storage. A US-India trade agreement under construction discussion will cover 19 categories, including greater market access for farm goods, e-commerce, data storage, and critical minerals. Okay. China considers exempting US goods from tariffs. We talked about that. Trump says he expects a tariff deal with Norway. Trump says negotiating deals with everyone would be physically impossible. Besson says South Korea trade deal moving faster than I thought. Okay, let's read into that. Besson told reporters on Thursday that U.S. made progress on trade negotiations with South Korea. We had a very successful bilateral meeting with the Republic of South Korea today. We may be moving faster than I thought, and we will be taking technical terms as early as next week as we reach an agreement on understanding as soon as next week. So South Koreans came early, they came with their A game, and we will see if they follow through, Besson added. President Trump imposed a 25% reciprocal tariff rate on imports from South Korea, which has been paused since April 9. The country's goods currently face a baseline tariff of 10%. Trump says U.S. talking with China. When asked who, says who, it doesn't matter who they is. After China largely rebuffed U.S. overtures this morning, President Trump claimed that the U.S. has been talking with China on trade and tariffs, though he declined to provide details. Quote, they had a meeting this morning, end quote, Trump said Thursday during a meeting with Norway's prime minister when a reporter asked about the Chinese statement. Pressed on which administration officials were involved in the discussion, the U.S. president said, it doesn't matter who they is. We may reveal it later, but they had meetings this morning, and we've been meeting with China. The exchange exposed the ongoing disconnect between Washington and Beijing as President Xi government maintains a defiant stance despite Trump's recent suggestion he could lower tariffs on China. Yeah, there's actually quite a few headlines here for Friday. Airlines rattled by trade war and spending pullback continue to cut flights pull outlooks. Airlines continue to shift into defensive mode as more Americans pull back on spending and begin to fear that tariffs will tip off a recession. Major U.S. air carriers Delta, American, and Southwest have pulled guidance and reduced planned capacity growth with the exception of slowing domestic travel. Expectation of slowing domestic travel. Okay. U.S. spirits exports rise 10% in 2024 amid tariff fears. Most Americans expect higher prices as a result of Trump's tariffs. Okay. All right. That's that. Let's do a quick market check. Tesla is up 9%. VIX is down. S&P 500 and Dow about flat. Nasdaq is up 0.6%, mostly due to Tesla, Nvidia, Google, and a couple of others. Declining issues exceed advancing issues, which is kind of interesting. Intel is down 7%, which is pulling down Dow. Ford is at $10 per share. Tesla is one of the most active stocks today. Um, I think there's some unwinding of hedging going on. I think a lot of people hedge their holdings going into the Q1 earnings, and people are expecting a big drop. But the fact that this stock had dropped quite a bit before the Q1 earnings, so it's not that surprising that there's a bit of a relief rally. And we'll see if this continues next week and the week after, and then we'll talk about that later on. All right. Tesla cut some prices. Okay. Tesla, I think, brought back the 0% APR for the Model 3. We have talked about that before. The Model 3 demand appears to be very low still. So I'm not surprised that Tesla brought back the 0% APR in April, the first month of the um, Q2, which is kind of unusual. I mean, April is supposed to be one of the strongest months of the year, seasonally strong for car sales. And in March, all automakers reported, except for Tesla, strong sales for March because of some people pulling forward their demand before tariffs hit. And Tesla is going to be impacted by these as well. The costs are going up by a couple $1,000s, according to the CFO. And now with the 0% APR for the Model 3 and the $2,000 incentive for previous Model Y owners when they purchase a new Model Y. And what I suspect is going to happen is that there's going to be another low APR offer for the Model Y sometime in Q2. It's possible that Tesla's margins will drop further in Q2 and to levels that people aren't expecting. I think Tesla's margins will continue to decline over the coming quarters, and especially in the coming months. So for Q2, this is supposed to be a seasonally strong quarter for Tesla. Tesla usually puts up best deliveries numbers in Q2. But again, for 3 years in a row, Tesla has stagnant or negative growth now. And I think that's going to be the case next year as well. I think the new Model Y across the world has very low demand, and that's not going to change anytime soon. These are really fundamental issues that the company has that haven't been addressed. And the stock swings every now and then 5, 10, 20% in either direction. But the fundamentals rarely change. And it's really unfortunate what happened to Tesla after Elon quit the company. The the one thing that I think the one thing that people forget is with robotaxi demand, center cities, city centers are where robotaxi demand mostly is. And these are, we're talking like top 10 cities, maybe top 15 in the US. There are many cities in the country, hundreds of cities in the country, but Uber demand is mostly in top 10 to 20 cities. Waymo is already in a handful of cities and they're expanding really fast. They're increasing the pace at which they're growing across the country and internationally. And they also said apparently on the Google call that they're going to um, they're going to start selling cars now. They're going to start selling cars in the coming years. So one of the arguments that Tesla bulls have had is that you can't buy an autonomous car from Waymo, but that looks like that's going to change, and I'm not surprised. I'm not surprised that both Tesla and Waymo will likely follow a dual approach. So um, let's go into that a little bit more. Let's see if we can find an argument, article there. Waymo reports 250,000 paid robotaxi rides per week in the US. Alphabet says Waymo may offer robotaxis in the future for personal use. So let's take this and post it up first, and now we're going to read through the article. Give me 1 second. Personal ownership. Waymo may offer robotaxis for personal ownership. This article is at the top of your screens. Of course, you haven't heard about this from biased influencers because it goes against their rhetoric. Alphabet says Waymo may offer robotaxi for personal ownership in the future. San Francisco, April 24, Google's earnings announcement last night. Alphabet's Waymo self-driving taxis may be available for people to own in the future, CEO Sundar Pichai said on Thursday. Oh, look at that. We got a machine here. Um, just as electric vehicle maker Tesla gears up to roll out robotaxi this year in the US, Waymo, which started as a small self-driving project in 2009 and spun out of Google 7 years later, has expanded slowly but steadily in a tricky autonomous vehicle market that has witnessed several casualties due to soaring investment, tight regulatory requirements, and tough technological hurdles. Has anyone posted about this? I'm curious because I don't see it from anyone. Waymo, which started as a small self-driving project in 2009 and spun out of Google 7 years later, has expanded slowly but steadily in a tricky autonomous vehicle market that has witnessed several casualties due to soaring investment, tight regulatory requirements, and tough technological hurdles. With more than 700 vehicles in its fleet, by the way, that was like 6 months ago, 300 of which operate in San Francisco, Waymo is the only US firm that runs uncrewed robotaxis that collect fares. Chai, on a post-earnings conference call, did not provide a timeline or any detail on how it plans to sell Waymo vehicles beyond saying there's future optionality for personal ownership. Tesla CEO Elon Musk recently commented on the higher cost of Waymo cars compared with Tesla's. Waymo's vehicles use a combination of cameras and expensive sensors such as LiDAR to create a three-dimensional map of the road, adding redundancy to increase safety. In contrast, Tesla depends only on camera vision and AI, which allows it to keep costs in check. Tesla's probably cost a quarter of what Waymo costs and made in very high volume, Musk said after Tesla earnings on Tuesday. I don't see anyone being able to compete with Tesla at present. Musk has bet Tesla's future on robotaxis and has said owners will eventually be able to make money by listing their vehicles on a ride-hailing app. The company aims to launch a robotaxi service in several US states this year, a target that autonomy experts have called ambitious given the difficulty technology has in responding to scenarios such as inclement weather, complex intersections, and pedestrian behavior. Rival Cruise, a unit of GM, shut shop last year following a major accident. Tesla has long blamed its customers for accidents involving driver assistance systems. It calls Autopilot FSD, noting that it warns Tesla owners to stay ready to take over driving. Its robotaxis would place crash liability squarely on Tesla. On Tuesday, Tesla stuck to its previously announced June timeline, blah, blah, blah. Growing through partnerships, Waymo, which has tested its technology for years, is now focusing on growing its presence through partnerships with companies such as ride-hailing firm Uber, fleet operator Move, and automakers Hyundai, Zeekr, and Jaguar. Waymo would like to offer personal ownership of its robotaxis through a partnership model, said David Heeger, analyst at Edward Jones. Google doesn't build all of them. Okay, it doesn't take an analyst to know that. Though the unit accounts for only a fraction of Alphabet's valuation, Waymo has said it's running more than 250,000 fully autonomous rides per week. All right. Machine, how are you?
I'm doing well. How are you?
Good. Why don't these influencers talk about this news?
about Waymo.
Mhm.
Well, obviously they're biased. Um, I don't know. Why do people hold on to Tesla stock when the earnings are decreasing over time? It's another question for you.
How are your
Because
positions?
um, I don't have anything in Tesla. I do have some. I am long Google. I'm not invested heavily in anything. Kind of my delta positions are kind of all over the place. So I'm not clear on a macro trend right now. I'm not bullish. I'm probably a little more bearish, but anyways, I do have some Google and Tesla probably short soon a little bit given its rise, at least temporarily. So I don't know. I mean, like just big picture, Tesla. You just remember each year we come in and we're talking about how much earnings would be. Oh, maybe if Megapacks produce this much revenue and this much gross margin, we can get to $5 per share in 2025. And it's just so much worse. Every year it actually ends up worse than we thought it would be, and more reliance on robotaxi. And essentially, it's gotten to a point that the earnings have become so low that you basically have people fully invested in this company like it's a startup. You're basically putting all your life savings in hopes that this company will be able to turn out robotaxis profitably in the next few years. It's a very high risk investment. Whereas Google, which has its own risks because of monopoly, because of competition in AI, is more diverse and it's more stable in its earnings. It has much slower, well, I can't say it has lower earnings growth. It has higher earnings growth than Tesla, but its PE ratio is certainly much lower, right? It's not valued as a high growth company. There's downside risk, but I feel like at this point it's a better investment.
You think Google is a better investment? Interesting. I mean, Google is seeing declining revenue growth, right, because of ChatGPT, and the business model depends on, um, advertising, obviously, on many fronts, whether it's search or YouTube, etc. And if the economy goes into a recession, then it's going to be one of the hardest hit companies.
Yeah, I don't disagree, which is why I dropped my Google position. I lowered the amount I was owning because it's like, well, maybe not a direct effect of tariffs and recession, but they're going to be a second order effect at least when other companies slow down. They're going to spend less on ads and search and all that. So like, yeah, I agree. So that's why I'm like not heavily into much. And yeah, Google, they're not, their revenue growth is slowing. I agree. That's why they're valued at a low ratio. But I don't know. I'm not gonna act like I see some clear winner investment wise in any company right now that I know of.
So what do I owe the pleasure today? Why did you join today?
I don't know. I don't have a meeting right now. I had a little time. I
Oh, okay.
just looked on Twitter and you and your 10 people that listen to you now. How the mighty have fallen. What's a bigger drop? Tesla earnings over the last 3 years
hmm
or your number of followers in your spaces?
Well, Tesla earnings are negative, so until I have negative listeners, then I guess I'm on top on that front. But
Wait, are you
yeah,
saying
that's what happens to listeners when you short the company.
if you take
People just want confirmation
yeah.
bias.
Wait, see, that's why I'm a true friend of yours. I'm still here. I'm not insulted.
uh-huh.
Think about all this I mean, we already know you paid for 39,500 of your followers. But of the other 400, they would come to these spaces, and now there's only 10, 20 left.
Yeah.
They
Yeah.
didn't care about you. They cared about being seen as Tesla bulls. So now they make their own
No,
spaces where they can do
no.
sort of their little
They
soiree.
I know. It's anyway, let's just focus on um either macroeconomics or Tesla. What did you think of robotaxi claims? 10 to 20 Model Ys starting in June, I suppose. I don't think it's gonna be June, but it's kind of in line with what we expected, right? Just a few cars later this year. And do you think that's gonna happen this year?
I mean, I didn't listen to earnings call because I don't care much anymore. But from what I've gathered from other people, he's Musk is saying they're shooting for 10,000 miles per critical disengagement. Is that correct for Austin?
Hmm.
So this is like nothing is, my predictions from 2 years ago, uh, are not perfect, but I feel like have been more realistic than most people on how
Hmm.
this has gone.
Yeah.
And just step back and think about everyone talking about exponential growth of AI and what it was going to do to intervention rate. And I'm like, wait, 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 wait. Like, there's all these other aspects in here that are going to slow it down. And here we are at not even yet at 10,000 miles per intervention, critical intervention. We're not there yet. And that's even in one city, right? Let alone the whole United States. And I had always been saying, listen, 10,000 is not good enough for robotaxi, like deployed wide scale. It's just simply, it's not safe enough. That's one aspect. But two, it's simply not cost effective, right? The liability um, it's just way away. I don't even you can even argue 100,000 miles is not safe enough. I mean, it depends on obviously the type of accidents. So, like to me, it's but you could get away with it with an engineering aspect like Waymo, where it's like, well, can the system understand when it's uncertain and when it might get in an accident, and at least ET phone home? And I don't know if they're trying to do that or not. So like to me, it's a good starting spot. It doesn't mean robo taxis are imminent in terms of cash flow at all. Having a few cars in Austin, barely making any money, not having a reliable enough vehicle is like Waymo. I don't know how many years ago. 10 years ago? More than 5. And I still think, of course, yeah, Tesla has the ability to scale up faster, but they're not there yet. So, Musk saying they're definitely going to have lots of robo taxis middle of next year. I don't remember what he said. This is just hand waving. It's just the usual. We don't know how it's going to go. Hardware 3 obviously is done. Hardware 4, who knows when that hits its limits in terms of the model. We see some of the Tesla employees admitting what I had said last year, which is they're getting to the point where they don't have enough test data to evaluate if they've improved or not because they're training on the whole data set and they only have a bit of data left to evaluate. How do they deploy and verify that their model is actually more accurate? Because you have to wait 10,000 miles per critical disengagement. um, how long does it take to get 10,000 miles in downtown Austin? How many vehicles over how many days? And you can't just do one set of 10,000 miles. You have to do 10 sets of 10,000 miles in order to get some statistical significance. So how long does it take to get 100,000 miles in downtown Austin on a version of FSD? So the iteration cycle is slower than most people think.
Hmm. Yeah, I mean, they're doing the same exact thing as the other companies, Waymo, um, Cruise, where they create this basically a bus route with a bunch of supposed robotaxis back to back to back to back. I would see cruises in Austin with like 20 of them back to back going the same exact route. It's like a bus route. I mean, I don't know what the value of that is, and they're going super slow. Um, Outside of novelty, have no use whatsoever. Waymo seems to be a step above that, but even they're having to charge Uber prices. They're still not profitable. They're growing, I guess. The adoption rate is growing, everything. But see, with everything AI, the problem is profitability. ChatGPT is growing. Hundreds of millions of people are using it, but they don't make any money. They lose billions of dollars. Tesla FSD adoption rate is not growing and lost billions of dollars. Uh, Google just announced that their depreciation schedule is accelerating, which is exactly what we discussed yesterday. That's the same is going to happen with Amazon, Microsoft, and Tesla because of the GPUs. But how are they going to pay for this without adoption, without people willing to pay more than what it costs to build these things? I mean, do you see that changing anytime soon?
You're talking about Tesla or any of these companies?
Any other companies?
You know the finances more than I do in terms of ridership volumes, cost per ride, and then operational costs. Like how far in the hole do you have to go to where you can start hitting break even? Like there's going to be a deep. Are you arguing that it's going to take years of massive losses in order to reach break even? Like what volume of ridership do you need to get close to breaking even? I don't know. Do you know?
I mean, you can have all the volume in the world, but if the next best service is just as good as you are, then you're never going to reach break even.
And you're considering next best service Lyft and Uber
Waymo or
against each other. Fine.
yeah,
Well,
Waymo, and also human-driven hybrids, extended range EVs, which benefit from the same you know cost per mile reductions, and to the extent that some people still prefer human drivers, then they'll have that as well.
well,
I mean, Tesla even talked about using remote operators, just
yeah,
like Waymo. So, like,
everything. Listen, they've converged. Listen, as much as people don't, there's much convergence into the approach toward what Waymo's doing, almost as if Waymo has had more experience over the years, and that's why they converged earlier.
mhm.
To your other points, I mean, I kind of agree and disagree depending on the area. One, I think people do value a driverless robotaxi over having a human. No one wants, no one, almost no one cares about having a human driving the car. Okay, I'm sorry. My family and I, we were in Florida, came back, got the Uber back from the airport. And this driver's like got all these ticks. He's just like anxious, and he's kind of like looking back and all over, and he's kind of like veering out of the lane and then back in. And I'm like, what is this guy doing? Like, and he's got some cough too. I'm like, how many people has this guy been in contact with? And I'm like, trust me and my family would have been just fine if it was a Waymo, if it would get you there in the same amount of time. And I think most people that's the case. And so I think that I would push back on. Um, that's probably the main pushing back. What I mainly agree on is for sure competition, especially in China, is going to keep getting funding, and they're just going to put the pressure on to where there's not going to be much marginal benefit for Tesla, and it's just going to be a cash sink. Now in the US, I don't know how long these other robotaxis, companies can last financially, and maybe Tesla can outlast them, or at least Tesla and Waymo. And then it's, what people prefer. I think people will prefer taking Tesla and Waymos over Ubers. I do think that actually. So I think they would be willing to pay a slight premium, but not much of a premium. People are, money conscious. So you're gonna have to get your cost per mile down. Um, and yeah, I think I agree. I don't know about, do you really need an EV versus a hybrid? No, I don't think so. Like we've talked about for years that in theory, the cost of manufacturing EV is going to be significantly lower than hybrid. A hybrid's got two systems. I don't know the COGS for whatever hybrid Corolla or a Civic. I don't know
Much
how
lower
much
than Model 3.
is it lower?
Yeah,
Then
of course.
then it's just then it's yeah, then it's silly. It's silly to talk about EVs as a benefit right now. Of course, I would prefer to be an EV. Most people don't care. So that's not a real benefit. So if Waymo can just get hybrids produced from Honda, then with some markup that Honda gets, but Honda's used to, low margins. They could probably compete with Tesla on cost. I don't know. Like the benefit to Tesla is the integration. I don't know how much that's worth.
What integration?
Just that they own the hardware, software chain, right? They own the car, all the sensors, all that. And whereas Waymo, if they say to Honda, give us, 10,000 Honda hybrids, and we'll put the sensors in, and like, how complicated is that? How much additional cost is that for them
It's
versus
not.
Tesla?
It's not.
Yeah.
I
Well,
mean, they can work with these automakers at the design stage and build
right.
into production line in the first place. Like it doesn't have to happen as a retrofit after the fact, you know. And yeah, I guess in the first few hundred or maybe a couple thousand, as they prove the concept, but they have proven the concept, and obviously they're talking to these automakers to build their sensors in the cars too. It's an option
So
for them.
why don't you ask your biggest Tesla AI experts the next time you talk to them? It's 2025.
You're my biggest as AI expert.
It's 2025. Tesla's had so much data built up over time. They've leveraged the latest and greatest transformer architectures, training methods, mixture of experts, whatever. Why is their vehicle reliability in Austin or whatever city worse than Waymo right now? What's the limitation? There really shouldn't be any limitation, right? They have enough data. They have enough compute.
They're fucking based out of there.
Why is their car more dangerous? It gets more critical interventions than a Waymo.
But because
What is it?
I can tell you why. I don't need any experts fucking telling me what the answer. Waymo has more inference compute on board than Tesla.
Well, but your AI experts would tell you, other than me, of course, that that's not a limiting factor.
Of course, it's a limiting factor. What are you talking about? Of
I mean,
course, it's a limiting factor. Because they have LiDAR, because they have HD maps, because they have more inference compute. Yes, it does cost more, but the performance is much better, obviously. Now, the question is, will Tesla's performance increase to that level anytime soon? I think it's going to take 5 to 10 years. I guess Elon disagrees, or Tesla bulls disagree as well. But these are the same people who said many years that it would be here by now, and even as early as just a few months ago, one of them said on my YouTube channel that Tesla was already doing 1,000 miles per critical disengagement everywhere. So,
who said that? Oh my god!
It's so funny. I didn't listen to earnings call for the first few days, and then I maybe want to do something with it. So I listened to it, took some notes. There's one exchange between one of the analysts and Elon. Elon's asking, in inclement weather, Tesla doesn't do as well. And Elon's like, yes, it does. And the analyst's like, oh, okay. Is that right? You sure? It's like, not. Colin. Anyway,
So, like, what's your deal now? You're still unemployed, houseless, no girlfriend, living alone in Austin. Now you don't have Tesla to hang on to. All you have left is this Spaces with 30 people. Where are you going in life?
And your friendship.
Where are you going? Exactly. That might be the most valuable thing you have.
Mm-hmm.
Where are you going in life?
Onward and upward. What do you think about macroeconomics? Inflation, interest rates, recession, growth, tariffs?
I think it's hard to predict a lot of those things. I would just say, in my mind, if there's any level of residual tariffs going forward higher than what there were previously, that's going to be enough to influence the economy in a negative fashion one way or the other. It's just going to take time to show itself. Now, outside of if there was any slowdown already starting, if there's residual tariffs, then we're already seeing, and outside of tariffs, like whatever sentiment against the U.S., you're seeing slowdown in tourism, slowdown in shipments from China into the U.S. significantly. That this stuff in a quarter or two is going to show up, and I just imagine that's going to start materially affecting earnings of many companies. I don't know. I'm not an expert in this, so I'm totally willing to listen to more information from people who do know, which I guess is not you, but I guess you're the only person we have. So outside of the already what you already presumed there was some recession starting, what do you think what do you think is gonna could change or add on to that, given all these things?
Yeah, I think a recession is starting. I think the US-China tariff discussions will continue for some time. I don't think it's going to be as easy as negotiating with Japan or Canada or South Korea. I think that overall tariff rates are going to be much higher than last year. Maybe not as high as some of these absurd triple-digit tariff numbers, but I think global trade will decline substantially. I think costs will increase substantially. And I don't think the companies will be able to pass on those costs to customers, consumers. So Tesla is already seeing this pretty early on, actually. The CFO talked about a couple $1,000s of cost increase on the automotive side and much more substantial increase on the energy side because energy relies almost all in batteries manufactured in China. And Elon also talked about a permanent magnet issue on the call, and kind of goes to show how dependent Tesla is on its suppliers in countries that are seen as adversary to the US. So, um, so really on all fronts, automotive, energy, and Optimus, the permanent magnet issue came up as in the context of Optimus production. Elon downplayed the Optimus project as more of a development project, so it's still 5-10 years out, which is exactly what we said in here. And I think margins next quarter, kind of focusing near term a little bit. Margins next quarter, I think, will be lower than Q1, and that's despite the Q2 being seasonally stronger quarter of the year. I think it's the strongest quarter of the year, actually. So we already seen Tesla bring back the 0% APR for Model 3. I think they're going to do the same for the Model Y next. And if and when they start producing these the lower cost vehicle, that's going to eat further into Model 3 and Model Y profitability. So I think we're looking at a company right now that can only make a couple $1 billion on energy and really no profits on automotive. So what's the value of a company that's not growing, really shrinking, and that makes a couple $1 billion in annual profit?
Well, certainly it's much lower than its current value, and that's where I just find I think it's one thing to think, oh, it's not worth shorting the company, but how are people positioned long It's worth $900 billion right now. The automotive is probably worth, like without FSD, I can't even say it's worth 100 billion. I mean, 100 billion is a lot of money for an automotive company. That's like, what's Ford worth? I mean, it should be worth more than Ford, but less than Toyota, I would argue. And maybe, like, if I was being lenient, I could say it's worth $200 billion. That's like a $75 stock or something. Now, that means that you have like 500, $600 billion worth of value attributed to FSD. And if you're bullish on FSD becoming robotaxi, you might be right. But the value of that might end up being $500 billion. Like, that's a lot of money. If you had a startup doing self-driving cars that starts deploying robotaxis to a point where it's earning enough net income to be valued at $500 billion, you would think that's a success. 500 billion is no small change. You have to have a significant service in place to get to a point you'd be valued at that level. One of the richest companies in the world, just at $500 billion. And Tesla already has that built into its valuation today. So where do you think this is going that you're going to get 4x return on top of that? Tesla hasn't even grown into that $500 billion valuation to begin with.
I agree with
So
that.
you're really betting that this company is going to be valued so far into the future.
Okay, but you haven't shorted
Unlike
the company.
any other company.
Why, you haven't shorted the company.
And this is different from 3 years ago, because at that point, you could at least move back and say, we have automotive profits and energy profits coming
Machine,
that are going to support it.
Can you hear me?
I don't know if I muted myself, but anyways, I was done.
All right. I think Machine couldn't hear me, but yeah, good. Thank you for stopping by. Always welcome to stop by. Let me see if there's another news. Tesla's India office is refunding early bookers of its Model 3, signaling that the company is near a rollout in the world's third largest automotive market. Okay. Ex-Waymo CEO John Krafnick, in response to Elon saying that Waymo's cost way more money. Tesla has never competed with. Oh, there we go. Here's Machine. Yeah, I think you couldn't hear me before.
No, I couldn't. So I just kept ranting on.
Yeah, you did. And I tried to cut you off saying I agree with everything you said, but let's review some news here. Ex-Waymo CEO says Tesla has never competed with Waymo. They have never sold a robotaxi ride to a public rider. They failed utterly and completely at this for each of the 10 years they've been talking about. Oh my gosh. Okay. John Krafnick. Okay. In the long run, the cost of sensors has a trivial cost per mile impact of the useful life of a robotaxi. And that's exactly true. That's exactly what we've been saying too. While also providing massive quantifiable safety benefits. Yeah. I mean, this is obviously the correct statement. Okay. Okay, let's see. Tesla reportedly has 300 test operators driving around Austin, Texas to prepare for their big June robotaxi launch, according to Business Insider. A spokesperson from the Austin Police Department said that Tesla has already held a testing day with its first responders from Austin and the Texas Department of Public Safety prepare for the big launch. June can't come soon enough, says lawyer. Sorry. Let's see what else. There's a company called Slate Auto targeting a starting price of $27,500 for a small pickup truck. Then skip that one. Kia's new all-electric EV4 sedan will start at $37,000 in the US, $29,500 after federal EV tax credit, 330 miles of range. Okay. We talked about Waymo. Tesla brought back free FSD transfer on new Model 3, Model Y, Model S, and Model X Cybertruck orders in North America. 0% APR financing for new Model 3 orders. Some early original Model Y orders, $2,000 off the purchase price. And some free paint colors for Model 3 Performance. Listen to this. This is marketing for you. Tesla's offering early original Model Y owners $2,000 off purchase price as a thank you.
How's the new Model Y selling?
Well, they had to bring back 0% APR in China after just a couple of months. And I think they're going to have to do the same here. The inventories are rising a little bit. So this is, like I said, this is supposed to be the stronger time of the year. So it doesn't bode well for the product.
Are you still short?
I refuse to answer that question. I decline to answer. On the advice of my counsel, I plead the fifth. I don't really
Well,
discuss it
I
much.
told you to close out when it was at like 220. I said close out, and now you could have reshorted it. Could have made you screwed up.
Okay. If you say so. But yeah, I don't really give out any details or anything like that. It's kind of pointless. This is a
Except
research
you used to. What are you
space.
talking about? You did for the last 3 months. Give out lots of
Yeah.
details about all your positions. Look at me, everyone. I'm going short. Let me retweet my own tweets over and over again. Are you
Yeah.
are you denying that you're doing that to this day?
Yeah, who knows? Who knows? But yeah, my average price was over $400. So but the company is worth less than $100 per share. Like there's no question about that in my mind. But maybe Trump does the art of the deal and brings all the tariffs down to zero, and we have no tariffs anymore in the world. And then BYD starts selling cars that are worse than Tesla at double the price, and Tesla gains market. A lot of things have to change for that to change, I think. Steven, farts, go ahead. Yutzi, go ahead.
I want to ask Machine a question about how much he would value the robotaxi business if there was, let's say, like two competitors, both Waymo, Tesla, and one other one, in like a steady state 10 years from now, what you would value the robotaxi business at?
Machine.
Oh, I didn't hear the first part of that. Okay, let's say in 10 years from now, steady robotaxi business with a few companies, what would that be valued at?
Correct.
I think I would have to do it's a good question, right? Because I think that's ultimately where you derive maybe what you'd value Tesla at. I don't know what the volumes would be. What do we think? What's the volume of Uber in terms of rides per day? And let's say Tesla could do 2x of that because there'll be more demand for robotaxi rides, or it's just a growing overall 2x, 3x. How does that play out in terms of gross revenues? And then assuming there's going to be lower costs than Uber, where does that play out at? I think that's like kind of a safe way to maybe like look at it. Presuming I assume the cost will be lower. So how much profit does Uber make? And I don't know off the top of my head. Give me a few minutes and I'll come back with an answer. What do you think though, Stephen?
You're not allowed to ask the other speakers questions.
Steven, what do you think? And then we'll go to Steven Farts.
I don't know. I think that's. I like the assumptions though, right? Like 2 or 3 times Uber's total rides per day. I think is a fair assumption for 10 years from now, assuming if there's 2 other competitors in the market, let's say Waymo and one other one, and let's say they have like pretty equal market share or similar market share. That means that we'd be talking maybe 6 times Uber current drives today, which I think is fair. Like I don't think everybody's switching to robotaxi in 10 years, so I think a steady state on that would be probably fair valuation. I just did some googling, and it looks like Uber does like 30 million rides per day. So maybe Tesla doing 60 million rides a day 10 years from now would be fair.
You're crazy. Steven Farts. All right, maybe there's a connection issue there. All right, let's talk some macro while you're here. What do you think about the current macro state?
Labor data continues to stay strong or not significantly deteriorate. And I think until labor breaks, I don't think the Fed's going to do anything crazy. And I don't think we can say we're in any sort of recession until we start seeing labor data deteriorate. Unemployment claims are still, I mean, low 200s, right? 220,000 or so. That is the 4-week average of claims right now. So seems like there's been a lot of macro uncertainty. We've heard of challenger jobless cuts. We've heard of all these things, but yet we don't really see it in any of either the BLS report or the weekly unemployment claims.
Mm-hmm. I mean, the problem with focusing so much on initial weekly claims is that everybody else is doing the same thing. Everyone else is focused on initial weekly claims. Like they are monitoring like a hawk. It has become, this stupid thing has become the most important economic indicator people watch every single Thursday at 8 a.m., 8:30 a.m. Eastern. Go ahead.
You mentioned maybe a month ago or so that you were developing this, what you thought was a leading indicator. How is that how is Yaman's leading economic indicator performing over the last 2 to 3 weeks?
Well, it's specifically for employment. And we are seeing some weakening still. Like it's not like things are turning up either. You know what I mean? Right?
For sure. Yeah, no, I agree. I didn't know if this indicator was built upon any sort of Party City, if you had like previous stock in Party City or if you worked in management for Party City. But I do remember a space in January that Party City was going to be the tipping stone to the great next recession. So,
Well, I don't think that's what I said. But what I said was this was a macro space, by the way. That was a macro space. I remember our conversation. I remember you making fun of Party City. I remember you making fun of the early indicator and everything. But these things take time. Like it's not like when people hear about their friend or neighbor losing their job, the next day they reduce spending. And it's not like when people lose their job the next day, they also lose their house. But things are generally moving in the direction that I've said. Do you disagree with that?
no, I think I don't think the macro conditions are improving uh, or like I don't think the economy's booming or anything like that. But
Mhm.
I think we're in a slow 1 to 2% growth environment right now.
Mhm.
What that means for stocks, I have no idea, but that's kind of what I think, at least from a broad macro picture. I don't think we're in a recession right now. I think growth is slow. I think inflation is down. And so I think the Fed will start cutting probably next month.
So that means you disagree with BlackRock's CEO when you say we're not in a recession now. Machine?
Well, I think, Stephen, the thing you didn't realize about Yaman and Party City is that he is the guy who sits there and blows up the helium balloons. That's his job for Party City. So that's why he has in-depth knowledge that there's less people going in asking for helium balloons. And so he only has simple work he can do, right?
No,
Just stick
see,
the
like,
balloon on the
see,
tube and turn it on.
machine doesn't even realize what you mean by Party City. He doesn't realize Party City went bankrupt and laid off all of its employees, and so did a couple other firms with tens of thousands of employees. So,
Are they gone? Really? I don't
yeah,
even know. That's
yeah,
too
you
bad.
didn't even know exactly. That's why you should be coming to these spaces more
Yeah, I
often.
guess so.
You have no
That
idea.
that reason alone.
Uh-huh.
My
Where are you
other
gonna buy your party stuff? You would go to Party City
I just
again.
go to Conchita down the street, the little shop.
Uh-huh. You're gonna have to blow up your own helium balloons.
That's way beneath me. And in response to Stephen's question just about Tesla in 10 years from now, so I looked up just Uber's revenues, and it's like 40 billion, and I project out it's growing, and I project out to let's say 100 billion. Let's say Tesla's doing 100 billion in revenue from rides. I know Uber has some other peripheral businesses, but I think let's predominantly rides. $100 billion. And I say let's say their operating income is 10%, which I don't know, that's decent. It's much higher than their automotive operating income. That's $10 billion a year in operational income. And if I valued that even at like a 30 or 40 ratio, you're getting a $300 billion valuation in 10 years from now for the robotaxi profit.
Yeah, listen, I don't have time for this nonsense. I want to talk to you, see, about macro stuff. 10 years from now, who knows who's going to be alive and dead? You would see. So, okay, let's talk about this macro situation a little bit more. So, initial weekly claims are still low. Continuing claims continue to be at 1.9 million. So people aren't losing their jobs, but those who lose their jobs are having a difficult time finding a job. And we have talked in the past about how when the companies might be holding on to their employees for longer because of the recent experience of how difficult it was to hire them in the first place and how much they had to pay up for to hire a new one, etc. On the other hand, inflation is rising. Even though March numbers came in lower than expected, they're still above 2%, and they're headed higher. Walmart, Target, and Home Depot CEOs are telling Trump to expect some empty shelves this summer if nothing changes. Besant is under fire to make deals, but there hasn't been one. South Korea, Japan, maybe soon, but you're still looking at the biggest one of them all, China. There's not even talks going on. Trump is saying there are talks going on. Xi is saying no. Reporters are asking Trump, so who talked to China? And Trump is like, doesn't matter who talked to China. So I think we are looking at a rising cost structure and a timid consumer, which combined says lower margins. Do you disagree with any of that?
No, I agree with almost all of that.
Okay. And with Tesla, it's even worse because Tesla is starting from a point of very low margins. They're not paying their CEO not anything. And even with that, Tesla is basically at break even. The free cash flow was $1 billion, but that's with slowing payments to suppliers, accelerating collections from customers in Q1, and bare bones capital expenditures, only $1.5 billion of capex, which means the AI training compute cluster build out could be slowing down here. Do you disagree with that?
No, I agree with all that. I looked at their financials last night, and when you're talking about the AP and AR stuff, it looks like that's pretty flat over the last 5 quarters or so. It looks like the days payable and the days receivable are haven't had any really material change in the last 5 quarters. Are you saying you see something else that I maybe missed?
Now I'm focusing specifically on Q1. Specifically on Q1, there's a dramatic slowdown in payments to suppliers and increase in so when you kind of take that out, you're looking at a zero free cash flow. But although inventories jumped, so what I suspect happened is they accelerated these battery imports from China in Q1, and the supply payments to suppliers will come out in Q2. And but that tells you the impact on margins is just delayed by a few months. I mean, you can only do that for a few months, and every company is doing the same thing, right? So when tariffs do come in, and the CFO say a couple $1,000s of impact on automotive, and you're starting from only 10% margin, gross margin, and that's gone. Your gross margin is gone. Tesla soon will have negative gross margin in automotive, which is Rivian, right? And energy is worse. The impact on energy is even worse because you have nearly 100% tariffs and everything, and all of the batteries on energy are coming from China. And that's really the entire product for Megapacks. So what do you disagree there?
How soon do you think they'll have negative gross margins?
I mean, honestly,
Or flat,
I
like
think
let's say under 5%.
I think Q2 might be it.
Coffee bet on Q3?
No, like Q2 might be it. Okay. Q3, I think with every quarter it increases for now. The probability increases for every quarter. But
I don't think there's any way that they have negative gross margins
so why
in
do you
any
say
quarter.
that though? Why do you say that?
So I think you're right on some things that, but I don't think you can extrapolate out everything with Q1 because I do expect deliveries to be higher and gross margins and stuff to be better next quarter than what they were this quarter.
Why?
Well,
They
actually, let me back up. I don't expect I don't expect them to be like me. Like I don't have as strong of feelings on gross margins as I do. Even if they hold margins flat, but volumes grow, then they'll make like they're not going to be negative from a gross margin perspective. I do have strong feelings about that.
why?
They'd pull back volumes before they do that, and I don't think they're at a point where.
But here's the thing. You can pull back volume to a certain extent. There's a limit to that lever. Okay. Like just take it to the limit. Let's say they didn't produce anything, or they produced one car and they sold it to the Elon's biggest fan on earth for $1 million. Your gross margin is going to be negative. Do you understand that? Because you have some fixed costs on the cost of goods sold.
Correct. Yeah, and that's my argument is that fixed cost absorption should be better in Q2 and Q3 than what it was in Q1.
Yeah, I think you're just way too focused on one thing, one factor. It's not just about fixed cost absorption. It's also about 0% APRs. It's also about prices. It's also about cost of the batteries and tariffs.
I agree, like on a whole, though, that I think their auto margins are going to be compressed for the foreseeable future, and I think Elon is just continuing to, like, he hasn't maybe publicly said it yet. He kind of has, and I don't think people fully grasp what he's saying, but he's completely betting the entire company on autonomy and anything with. Obviously, I don't think Optimus is anytime soon, but to some extent, you could say he's also betting it on Optimus. So. Yeah, I expect auto margins to stay bad for, like, let's say the next 4 to 6 quarters, which is about the limit to what you could kind of forecast with any sort of certainty.
Okay, so you're saying they're going to remain compressed, but there's no way they're going to go below 5%. And I guess that's the part I don't quite understand. How can you be so precise?
I shouldn't say I'm precise on 5%, that there won't be 2% or 1%. They're not going to lose money on automotive. It's like, I guess is what I'm trying to say on a
But they are
gross
losing
margin
money
rate.
in China, right? You realize that both Model Y and Model 3 loses money in China on the gross margin side.
How do
You
we know
realize
that? Where's the facts on that?
Troy has been really good at that stuff.
not on the financial model. He is on the delivery modeling, but I haven't seen anything from Troy that he can break out the.
Troy is really good at production deliveries and ASPs and gross margins. His weakness is operating expenses. And I think that's really all you can ask from the guy, because there's a lot of moving parts in the operating expenses that most people don't understand. One, and then two, there's a lot of one-time things. So to the extent that people post their EPS estimates and everything, it doesn't matter, right? There's a lot of moving. Like, for example, one of the guys said the other day, if you remove the FX impact, I'm spot on. Like, so that's part of the forecasting, you know? So there's no doubt in my mind that Tesla loses money every car it sells in China. And it's also losing market share. So it's possible, I would say likely, that Tesla will exit China in the next couple of years here, in the next few years, let's say. And the same is happening in Europe. In Europe, I think Europeans are now bringing Chinese imports in more quantities. Chinese automakers are starting to build production capacity in Europe as well. And that's going to drive Tesla automotive out of Europe. So the only thing that's left is US, where you have, I guess, some, friendliness with the administration that they can pull some levers maybe for your this and that, etc. But maybe your $75 tax credit doesn't go away. Maybe Trump does another showroom at the White House. Who knows? But the fact is, the global market is 5 times, 6 times bigger than the US market. And even in the US, Tesla is going to suffer competition from Waymo, or hybrids that cost cheaper to produce. And Waymo is now looking into selling personal cars as well. So, go ahead.
So I kind of want to. Do you want any sort of coffee bet on auto gross margin or total company gross margin? I couldn't remember exactly what it was last quarter, but it looks like with regulatory credits, it's like 16% or so in Q1. So could that dip a little bit? Yeah, absolutely. And I think from an operating margin standpoint, I think that it'll continue to be low for the next 3 to 4 quarters. But I don't think there's a big difference between having
So
low
you don't
margins
think
and
you
having
don't
negative
think
margins.
you don't think operating margin? I don't think so. First of all, I don't think there's much of a difference between low margins and negative margins. Secondly, especially if the negative margins are temporary. Secondly, you don't think operating margin will turn negative?
Correct. No.
Okay, I'll take that coffee bet. Okay. Let's say in the next 12 months, we will have a quarter read with a negative operating margin. Is that fair?
Yep.
Okay.
Although you were kind of painting it as you said, this next quarter things are going to get worse, and you're almost painting it like they're going to lose money next quarter. I mean, I'm fine for the next 12 months, but that's different than what you've been saying. Or like, can you quantify a little bit of what you mean by you think things are going to be definitely turbulent? Like, do you think they're going to have under 10% gross margin on either auto or blended the next like 2 to 3 quarters?
No, I think the blended margins will probably stay positive on the growth side. But you mentioned operating margin. That's why I kind of focused on operating margin. You said there's no way operating margins can turn negative, so I'll take that coffee bet. I think that the auto non-GAAP margin will continue to decline. I think the demand is just not there. They have really bad demand problems. And I think Tesla, over the last 2 years, has pulled a lever after lever, trying to shore up its gross margin, trying to shore up its sales, capacity utilization, etc. And they're running out of levers. So I think in the next few quarters, we'll see somewhere around less than 10% non-GAAP automotive margin and a negative operating margin. Go ahead.
I think the one area where you might be right about would be the depreciation side. So that flows. Does depreciation hit? Is that R&D or SG&A that depreciation falls under?
Most of it hits in COGS, but it can also be in R&D and SG&A.
Because I assume they have to start expensing, or excuse me, they have to start depreciating a bunch of these chips and stuff that they bought. I don't know what the useful life is, but obviously that stuff's expensive and that has to flow back through the income statement, correct?
Yeah, but that's not the problem. Like that's not the problem. That's more of a problem for Google, Amazon, Microsoft, who've been buying GPUs tens of billions of dollars. Tesla's problem is competition, and that's not going anywhere. It doesn't matter what the interest rates are. It doesn't matter what the economic growth is. It doesn't matter what the GPU depreciation is. BYD still produces better cars and sells them half the price. And the fact that they're growing across the world. Xiaomi just killed Tesla in China with their SU7, and the YU7 is coming soon. Autonomy, they're giving away for free. Like interest rates don't matter. What Elon is doing at Doge or Tesla doesn't matter. They're not going to stop. They're only accelerating. And there's nothing Trump or Elon can do about it. Okay. And Elon doesn't care. He doesn't give a fuck about Tesla. Like Tesla will still haven't accepted this fact is that he goes on these calls now and makes absurd comments, which kind of tells him like he hasn't really even thought about Tesla in the last year or two. Like some of the comments, I mean, I posted one of them yesterday. He's talking about how Tesla has a superior hardware, software, AI team. On what earth are you living? Like, what level of delusion is that to say stuff like that today? When Google is mopping the floor with Tesla, when BYD, Xiaomi is mopping the floor with Tesla on all these fronts. But I mean, I don't know. I mean, either there's something I'm not seeing, and he's a genius and everything, seeing everything. But on the other hand, after I felt all that, Troy posts, Elon is ramping up hype as Tesla's fundamentals deteriorate. And that's exactly my take. So, I don't know.
Yeah, I mean, I agree that the core auto business is gonna struggle for a while, and it seems like the adoption of EVs has been kind of flat, especially in the United States for the last couple of years. And like you said, it seems like I don't know if hybrids is I don't think it's just hybrids. I think just in general, people don't want to completely switch to electric vehicles. So I expect the auto business to stay pressure for a while, but maybe they'll do something in autonomy. I don't know.
But like I said, BYD is giving away vision on autonomy for free. Like for $8,000 in China, you can either buy Tesla's FSD or you can buy the BYD vehicle and the autonomy is free. Like, do you want autonomous car for $8,000 or do you just want the software with the promise of it working sometime in the next couple of decades? Which one would you choose?
I don't think BYD is ever going to be in the United States market in the next 5 years, let's say.
Man, that's what every Tesla bull says, and I'm like, it doesn't matter. Tesla U.S. market is 1/6 of the global market, and the global market is growing. The U.S. market is shrinking. So why does that matter? So I'm actually thinking about increasing my Tesla short position. These levels are absurd. I mean, this company is worth no more than $100 per share. Elon killed the company. He just silently quit, and he did things that hurt the company's sales and margins and prospects. He took engineers to his other companies, and he just killed Tesla. It's crazy to think about it. It's like killing your own baby, but he did. So, all right, let's leave on that note. Do you have anything to say on housing, Yuxi?
Mike had a video out, his monthly webinar, where one of the things I wanted to comment on that is it was like an hour-long video, and there's a few more charts that he includes on that he doesn't include on the weekly stuff. And he showed a chart that showed houses for rent, and it showed that it was tipping negative year over year. And I think that's meaningful for keeping a lid on prices, because I kind of think of the rental housing market similar to like used vehicles, where if used vehicle prices are falling and stuff, obviously it's hard for automakers and Tesla, obviously, specifically, to have strong pricing power if the rental market or the used market is having price pressure. So that's what maybe the biggest thing I saw is, if you haven't watched that video, I'd encourage you to watch it.
Yeah, I will. It's on the next on my list.
Yeah, I'm
All right.
guessing you think he probably sounds kind of bearish on it. So, but my overall sentiment related to housing, I still think -2% to +2% prices for the end of the year. Inventory is picking up a lot, so definitely more of a balanced market. It seems like sales are also picking up. So, yeah, so I think good housing market, better balance, kind of more towards how housing was in, let's say, 2017 to 2019, before all the craziness, where there's a good balance of sellers and buyers in the market.
Okay. All right. I mean, I disagree, but I respect your opinion. All right. Thank you very much, everybody. And I will chat with you all next week. Take care. Thanks, Lucy.